Hey guys, welcome. I've got a great video lined up for you today. We're going to go through a couple clips from Congress. There's hearings today, and there's some really important clips talking about crypto regulation in the United States. I'm also going to go over the 4 bills that are going through the House right now, what the bills are, what they will and will not do, and I'm going to shine some light on a couple different things. And this is going to be a longer video. I do apologize, but it'll be worth it. All right, guys, let's get into the video. U.S. cryptos futures could fall on these 4 digital asset bills. Okay, so let's talk about the bills. All right, since 2022, there's been over 50 digital asset bills reportedly introduced to Congress, aiming to govern everything from stablecoins to the jurisdictions of the United States regulators. The bills in question, there's 4. All right, so let's talk about it. Financial Innovation and Technology for the 21st Century Act. This bill, introduced on July 20th, aims to create a solid process for determining if a digital asset is a commodity or a security, and would clarify the jurisdictions of regulators. Introduced by Republican members of the Agricultural and Financial Services Committees of the United States House, the bill would give the Commodity Futures Trading Commission power over digital commodities and clarity on the Securities and Exchange Commission's jurisdiction, right? What the SEC can and can't do, kind of. It says a process for crypto assets that have been labeled securities would also be given a path to relabeled as commodities, which could see some projects revived after being effectively shut down due to the past legal decisions. So what this is saying is, in layman's terms, is that something can start out as a security and eventually decentralize into something like XRP, right, where Ripple was really in control in those early years, but then built a foundation and then let loose. They reduced their node count. That is what we're talking about here, going from a security to a commodity. There's also the Responsible Financial Innovation Act, known as REFA, but I don't like this bill, and I'm gonna play a clip and show you why I don't like this bill after we talk a little bit about it. So, a bill with regular goals, known as the Lumens-Gillibrand bill, or the RFIA, aims to clarify the SEC and CFTC's role in crypto regulation. It also aims to give greater consumer protection by providing laws to prevent another FX-style event from occurring, according to the bill's fact sheet. Digital asset tax treatment clarity is also covered, and the Federal Reserve would be ordered to process bank applications to master accounts from crypto firms or an equitable basis. But check this out. I want to play this for you. Mr. Hubbard did this. All right, so these are the 2 ladies that came up with the bill, Gillibrand and Loomis. But listen to what they are saying, because they're going to tell you one thing, and then behind the scenes, or later on, they're going to tell you something completely opposite, and I think it's garbage. Listen to this.
The regulatory framework, by utilizing what's in place now. Most cryptocurrencies are commodities.
Most cryptocurrencies are commodities. Remember that part.
And within the jurisdiction of the Commodity Futures Trading Commission for trading, spot markets, and futures markets.
Wait for it.
You would agree with Chairman Gensler that
wait for it.
Most of them probably are securities, and I take it your legislation isn't meant to change that.
No, it's just that people didn't read it properly.
Oh.
We just said that there are commodities, and Bitcoin is one of them, and Ether and a few others probably are as well, but that there's a test.
We have 5.
The Howey test, it's worked, and we updated it to actually work in the framework of assets. And if there's 15,000 cryptocurrencies, that means 14,900 and something are securities.
So on one hand, they're telling us that most of these cryptocurrencies are commodities, and on the back hand, they're saying that 14 out of 15,000 cryptos, which there's like 23,000, but out of all of the cryptos, there's only maybe 5 or 6 that are commodities. So I don't like liars, and that is what this is. Just showed you that. All right. So yuck. I don't like what they did there. There's also the Digital Asset Market Structure Bill, called DAMS. All right, introduced on January 1st. DAMS. Sorry, I can't help it. Is another bill aiming to define crypto-related roles and SEC and CFTC, and set a framework for regulators to make determinations on certain cryptocurrencies are securities or commodities. The bill is getting some attention. On June 26, Representative Maxine Waters sent letters to Treasury Secretary Janet Yellen and SEC Chair Gary Gensler, asking them to weigh in on the bill. Under the proposed bill, before a certain crypto token is given commodity status, it would have to undergo certification with the SEC to prove it's adequately decentralized. The SEC doesn't know what the hell they're doing as far as figuring out if something's decentralized. To them, everything is a security, nothing is a commodity other than Bitcoin. That's their stance, and they're not budging. Crypto exchanges will be able to register with the SEC as an alternate trading system, or an ATS, and the regulator wouldn't be able to deny registration due to the platform trading digital assets. The crypto firm Prometheus is an SEC registered ATS that can offer trading, clearing, and settlement custody of digital assets, although it's currently unclear which assets the SEC permits. This was the company that had ties to China, and they did not do a good job going about it. And I think the guy actually lied under oath, the head of Prometheus. So not a big fan of this either. The Digital Commodity Exchange Act, or DCEA, I like the dams better. First introduced in September 2020, an updated version of DCEA was last reintroduced in April 2022, adding that stablecoin providers could register as a fixed value digital commodity operator, exclusive of recording and reporting requirements. The DCEA hands the CFTC the power to register and regulate spot exchanges, which are brought under the same rules as any other commodity exchanges. I like this a lot better, guys. I like this a lot better. We're going to move to some clips now in Congress. I got 3 of them for you, and they are saucy. First, we're going to talk about the young, beautiful Reggie Torres. This guy gets it. He understands it. He's on our side. He's a beautiful man. Let's get it. Let's get in.
On the subject of crypto, and there's almost no point in relitigating those differences because it's been extensively debated here today, but I find myself unpersuaded by the notion that the status quo is working. You know, a status quo that gave us the largest crypto Ponzi in history is not working. It's by definition failing.
Yep.
My assessment is that the status quo is dangerously deregulated and requires regulation. Albert Einstein said, if we do the same thing over and over again and expect a different result, that's the definition of insanity.
Word.
And the time has come for us to break the cycle of insanity that governs the application of securities law to digital assets. Now, there's a difference between securities law as we as individuals might think it ought to be interpreted and securities law as it has been interpreted by the courts. And the Southern District of New York has held that securities law protects institutional investors in ICOs, but fails to protect retail customers on exchanges. The SEC could, in theory, appeal, but an appeal would take years. So regardless of one's personal view on securities law, we have a status quo in which institutional investors are protected, but everyday average Americans are left exposed. And the choice before the committee in the world as it is whether we should maintain that status quo or change it to fill the gap in investor and consumer protection for everyday Americans. And I believe we should change it. Now, there are those who argue that there's no need for Congress to act, that we should leave it to the courts and the regulators to figure out the application of securities law to digital assets. One of my frustrations is that Congress is often the most powerful. We as Democrats argue that we've ceded far too much authority to the courts, particularly the Supreme Court. Republicans often argue that Congress has ceded too much authority to regulators. We can reclaim as our authority as a legislature by actually legislating. And we should legislate with respect to digital assets. Now, there's a concern that the legislation would circumvent the Securities and Exchange Commission. That is not my reading. I read the bill to codify the SEC as a regulator of digital assets. The bill essentially holds that a digital asset is presumptively subject to the jurisdiction of the SEC until it is shown to be sufficiently decentralized to constitute a commodity. That's not a circumvention of the SEC. That's a codification of the SEC's authority to regulate digital assets.
So Democrats are basically trying to push some bills that give the SEC more power over the CFTC, and we want the CFTC to have more power because they're the Commodity Futures Trading Commission, right? We want most of these cryptos as commodities because let me explain this to you. If something is a security, there's a whole lot more reporting that has to be done every time something's bought or sold, and so when it's a commodity, you don't really have that. So if a crypto is labeled as security, like if XRP was a security, it'd be really difficult for banks to use it for all of these transactions because every transaction they would have to report something. So that's why having it as a commodity is basically what any kind of cryptocurrency needs if they're going to be on the main stage in the world, being able to be decentralized and go from there.
Concern earlier that a corporation like Apple can tokenize stock. A stock is inherently a security, regardless of whether you tokenize it. In fact, the legislation says the term digital asset does not include any note, stock, treasury, stock, security, future, all the traditional securities. So the legislation does not apply to traditional securities. There's a difference between a security in itself and a digital asset that's offered as part of an investment contract, which is a security. There's concern about the safe harbor. My understanding is that the safe harbor offers no protection to any bad actor who perpetrates fraud or market manipulation or misappropriation of funds. Right? A bad actor like FTX and Sam Bankman-Fried would not have benefited from the safe harbor contemplated in the legislation. And there are legitimate concerns about regulation by enforcement. The SEC has not issued a single rule clarifying the application of securities law to digital assets. There's been no written guidance. We've heard mixed messaging not only between the CFTC and the SEC, but within the SEC itself. The CFTC tells us that Ether's a commodity. The SEC has said that it's a security. Mr. Gensler first said that Ether's too decentralized to be a security. Then he said it was a security, and then under questioning from Chair McHenry, he said that it depends. I mean, if you consider that regulatory clarity, then you live in a different planet for me. I am confused by the mixed messaging, by the lack of rules and guidance that have been provided by the agency. And this legislation is far from perfect, but it represents a good faith attempt to bring clarity to an area where none exists. And I associate myself with the comments of Congressman Himes and Congressman Nickel, and I will support the legislation. I will not let the enemy.
Also, guys, check us out. There's another clip here. This is a 3-minute clip, but basically Representative French Hill shuts down misleading claims about a bill. Check us out.
Many more questions about this bill and implies they're not answered. But I think of many of the questions we've talked about for the last 2 hours, there are answers to each of those points, and they're in the bill.
Look at this guy.
For example, my friend from New York, Mr. Torres, noted you cannot tokenize a security in this bill. It's strictly prohibited. Page 10.
Everything is going to be tokenized, guys. Stocks, bonds, derivatives. The U.S. has to get this part right, because if they don't, they're going to screw up themselves trying to roll out this. It's funny. It's like one part of the government doesn't understand where the other part is going, right? It's really sad to watch.
It's not a digital asset. The assertion by Mr. Sherman to that point is not accurate.
Mr. Sherman's an idiot.
There's a concern that somehow we're going to facilitate weaker consumer or investor protections. That's absolutely to the contrary, and some of those have centered around this issue of provisional registration authority. So a provisional registration authority creates safe harbors from certain actions, but people are able to be prosecuted. No cases against people are stayed by a provisional authority. That's not correct at all. And the fact that the SEC has won almost 130 cases, not true. They settled 130 cases.
Yep.
And they're confusing and disjointed. And we saw the most recent example of that in the Torres decision in XRP, the Ripple case last week. That's why we need to act in this Congress, to bring clarity. And we are not gutting of the SEC. We're enhancing the SEC. We're directing the SEC in a bright line way what their mission is. And as noted by the gentleman from New York, we are showing then how it is governed by the securities regime. And if it's not a security, it's governed by the commodities regime. Now, Mr. Kasten says that this industry is covered with wash trades. They're prohibited in this bill. Broker dealers in the commodity space are registered with the Managed Fund Association. Brokers and dealers in this space are registered with FINRA. They have rules of procedure. They have high standards in this bill that absolutely causes that not to be the case. And funding, we've heard a lot about funding. I know Mr. Scott, when he goes to the markup on this bill tomorrow in the House Agriculture Committee, he'll get to vote for this bill, for Title IV of this bill in the Ag Committee that funds with mandatory spending the funding for the Commodities Future Trading Commission. And to the assertion that somehow we've stopped fees that Mr. Lynch said, that's not true on page 114. We do not do that. There is funding, and Republicans support adequate funding based on the bills authorized by this committee and the Ag Committee as to what they will actually do. We'd be happy to do that. But this is an authorizing committee, not an appropriating committee. So, Mr. Chairman, I think you've done good work working through these issues. I think they're well drafted in here. We've had tremendous comments and help from people off the Hill and on the Hill, and I have to thank my friend, Mr. Himes.
All right, we got one more clip, guys, and then I'll get you out of here. I know it's a little bit longer, but hey, you need to listen and understand what these guys are saying, because they're going to decide basically regulation for a large part of the world, because a lot of countries will follow U.S. regulation, good or bad, and so we need to make sure it's good and not bad, because if it's bad for all of us, and we want the best, baby. All right.
Thank you, Stephanie.
Tom Emmer.
Hopping off of our hockey soapbox this week, I wanted to talk about something that may be flying under everybody's radar. Today, our nonpartisan legislation, the Blockchain Regulatory Certainty Act, is going to be marked up in the Financial Services Committee. Crypto and blockchain technology provide an important opportunity for our country to lead in the digital asset space. I commend Chair McHenry for moving forward with this. Today, we've got an important opportunity to make progress towards providing regulatory certainty that benefits consumers and fosters innovation right here at home. This bill specifically deals with what blockchain-related entities qualify as money transmitters across the country. Major discrepancies in the state-by-state framework on this issue have stifled innovation and confused the marketplace on how to comply with money transmission requirements. The Blockchain Regulatory Certainty Act will clear things up by affirming for the blockchain community that if you don't custody consumer funds, you aren't a money transmitter. It's simple, but very important. A clear and consistent regulatory landscape will ensure we do not drive this transformative technology overseas or drive American consumers to bad actors. This bill will allow blockchain innovation to flourish right here in the U.S., and I look forward to continuing to work with my colleagues on the committee to get it over the finish line.
All right, guys. So right now, I don't trust Democrats to put forth a good faith bill because of all of this SEC ties. You know, Brad Sherman, Maxine Waters, they're really good friends with Gary Gensler, and it doesn't smell right to me. Republicans are leading the right way. I think in the background, you're having probably people from Ripple and Circle and all these other stuff lobby the Republicans and really kind of helping to educate them on what these bills should and shouldn't have in them. And so I do think we are going to get Republican-led legislation first, and I really hope it's not the Lumens and Gillibrand bill, because that is ass. All right, guys, thank you so much for watching. I'll see you the next time. I know this was a long one, but hey, you need to be updated. It's all good information. I'll see you. Bye.